Inflation is on its way down in the UK. Yes, for the third month on the trot, we have now seen that inflation has fallen. It's now down to a rate of 10.1%. Now, historically, this is still pretty high, so let's not get too excited just yet. But the fact that it is falling, even though it is steadily falling, is still a really good sign for our economy. But how is this going to affect not only what tactics the government use, the Bank of England use, but also what effects it's going to have on our property market and, of course, our mortgage market? Well, stick around, because in this video, I'm going to go through each of those points in turn and give you my thoughts on those subjects. Before we get into it, if you could do me a massive favor and hit the subscribe button if you don't already. I know a ton of you are watching these videos who haven't subscribed to my channel, so it makes a massive difference to me if you do that. Also hit the notification bell, and if you're loving this video, hit the little thumbs up down below, because that actually tells YouTube I'm doing a good job and it helps me massively. It's a small little click for you, but it means a lot to me. So let's get into it. As I was saying, inflation is down to 10.1%, which is an improvement month on month over the last 3 months. Now, we have seen the Bank of England be really aggressive with increasing their base rate, which traditionally has been a method of combating inflation and helping stimulate a better economy. Obviously, what the Bank of England and the government are doing is working. It is slow progress, but it is working. And what this probably means is we're going to see a continuation of the tactics that have been employed, namely Bank of England base rate rises. This time last year, we were getting predictions from some economists that the Bank of England base rate was going to get to 6%, to 7%, maybe even to 8%. But more recently, it's become a little bit more conservative, most predicting a high of 4.5%, which means right now we're only 0.5% off. This actually doesn't give the Bank of England that much wriggle room, so I would expect them to still make an increase in their base rate in March. Now, at this point, to be honest with you, nothing would surprise me. Who could have predicted what we were going to see over the last couple of years? But I don't really think that the Bank of England are going to swoop in and go straight for that 4.5%. I'm not sure that would be the most productive thing in the world, although it wouldn't shock me. What I'm actually more predicting is a rate rise of somewhere between 0.1 and 0.25%, probably 0.25%. This means that the Bank of England, when we get round to April, can make a decision as to whether hold things for a while or do another minor increase as we get up to 4.5%. The Bank of England has set their stall out. I think we're going to get to 4.5% this year at some point. As we've seen recently, though, the Bank of England base rate increasing is not necessarily having the knock-on effect to the mortgage market that we thought it might do. If you want to learn more about why mortgage rates are coming down whilst Bank of England base rates are going up, then check out this other video that I recorded recently. So if the Bank of England do continue to raise their base rate over the next couple of months, 2, 3, 4 months, is this going to have the continued impact that we have seen on the rate of inflation and the economy? Well, most people would agree that it will, and that we are probably predicting now that by the middle of this year, sometime between June and August, we're going to see the rate of inflation hit around 6%. If we do that, then we are on target to hit possibly 4, 3, maybe even 2%, which is, don't forget, the Bank of England and the government's target for inflation just in a normal economy. So if we can hit that by the end of the year, that would be insane. So 6% by June to July to August this year would be a really good barometer for us being able to hit a good rate of inflation by the end of the year. Although we have seen slow progress over the last couple of months to do with inflation coming down, clearly everything is having a positive effect. And I think just by continuing a lot of these methods, we will hit that 6% middle of the year target. So I fully expect, and here is my prediction, I fully expect within the next 2 to 3 months to the Bank of England raise their base rate to 4.5%. It's going to really kickstart that reduction in inflation and get the economy back on track at the same time. Inflation has caused what we are calling a cost of living crisis, with the cost of just everyday items absolutely skyrocketing, from petrol down to beer, fags, and day-to-day essentials going through the roof in terms of their cost. The rate of inflation is actually measured on the cost of these products, so a reduction in inflation is actually highlighting that some of these costs are slowly coming down. We will sometimes see massive reductions in certain items and not such big reductions in others, and maybe even increases in others, which leads to what the overall rate of inflation is at the moment. So let's move on to my favorite subject, the property market and the mortgage market. What is happening right now as a result of inflation slowly decreasing? Well, one of the things that we've seen throughout the last few months is a massive dip in activity in the property market. This has mainly been because affordability for residential purchases to get get a mortgage has been clipped. With rising interest rates, it's actually harder to afford a mortgage. This is because of how residential mortgages are actually calculated in terms of how much you can borrow. Many people still believe that we're working off something called an income multiplier when it comes to working out how much you can borrow on a residential mortgage, which essentially means that however much you earn is multiplied by something like 4 or 5 times, and that is how much a mortgage lender will lend you on a mortgage. This actually changed a few years ago when we had something called the Mortgage Market Review and an affordability assessment was brought into play instead. This is really important at the moment because how much you're actually going to pay on your mortgage has a direct correlation to how much you can actually borrow. So with rates increasing, this makes this assessment much more strict. Effectively, how this affordability assessment works is lenders will take your income and your expenditure to work out a surplus. Now, this surplus will have to be big enough to cover your monthly mortgage payment or your new monthly mortgage payment, plus a little bit extra. And this is actually stress tested at a higher rate than you're actually paying. So as you can see, the higher the average mortgage interest rate goes, the more difficult it is actually going to be to get a higher mortgage amount. This has meant that lots of buyers in the UK over the last 12 months have found it harder and harder to get onto the property ladder. So less buyers in the market means that there has been a big slowdown in the property market as a whole. This has, of course, had a knock-on effect to the rental market, which has been surging recently, but we'll cover that in another video. Now, many estate agents were actually predicting that we were going to have our usual January boom, where loads of people are suddenly going to come back into the market to want to move home. That didn't happen. However, many people were predicting that this was going to be a really difficult year for residential property, with property prices across the country dipping and some even predicting a crash. Now, with the rate of inflation dropping, that should put some pressure on the Monetary Policy Committee, who are the people that make the decision on the Bank of England base rate, to not increase their base rate as much as perhaps they were previously, which is where we got that new kind of high of 4.5% rather than the 5, 6, 7% that were being predicted previously from. And of course, if the Bank of England base rate is not going up as much, that hopefully means that we won't see mass increases in mortgage rates either. In fact, right now, mortgage rates across the board are actually coming down. Again, check out that video that I mentioned before for a little bit more on this subject. So logic then suggests that if we are seeing inflation coming down, the Bank of England is not putting its rate up as high as we first thought it was going to, and we are starting to see economic recovery, perhaps by the end of this year, the Bank of England might even start to put its base rate down again. This will hopefully have a really positive impact on mortgage rates. And of course, we then reverse everything that I have just said, and mortgages will become more affordable again, which should see buyers rushing back to the market. So who knows, guys, maybe 2024, we might see another boom in property prices. You can't make this stuff up. So that's what I think is going to happen, or there are a few predictions that I'm making. To be honest, they're more sort of thoughts, because at this point, I can't predict anything. Nobody can. It's really, really tough. All that we do know is that things are seemingly going in the right direction. I'd love to hear what your thoughts are on this subject. So drop your thoughts, drop your ideas, drop your predictions in the comments below. Let's get a nice little conversation going, and let's see what happens over the next couple of months. I'm going to be keeping these videos coming, so I'll be keeping you updated on what's going on with the rate of inflation, with mortgage rates, with the economy, everything like that. So make sure, as I mentioned before, to subscribe to the channel. I've got nearly 200 videos on this channel, so if you're liking this one, surely there's going to be some other stuff you're going to like. And don't forget to hit the notification bell, because I am releasing videos weekly and you don't want to miss them when they come up. Thanks so much, guys, for watching all the way to the end. It's much appreciated. If you do like these videos but you prefer listening to your content, don't forget you can also subscribe to my podcast, the Game of Loans podcast. There's a link in the description below for you to go and subscribe to that too. There's 111 episodes of the podcast for you to get chewing on, so hope you enjoy that as well. Thanks for watching, guys. I'll catch you on the next video.